Okay, good afternoon. We'll hold on just a second for people to log on. We'll talk quite a bit about GameStop today and some trades I made, and explain why. And it's interesting to look at what happened today. It's just spectacular. And also the what happens next whenever something in the market happens that people like or don't like or raise questions about. Every politician starts jumping on top of that. Elizabeth Warren was just on CNBC. I am actually a significant Elizabeth Warren fan, but the interview was awful. I just, we just run back to these same ridiculous political talking points all the time on the wealth paying this percentage and what tax will do this, and she's talking about child care and everything else. She did make some valid points, but it gets mind-numbingly ridiculous when a politician in a situation where knowing specifics would be helpful, and she's certainly smart, runs to these political talking points over and over and over again. But it was an interesting day, and if I think a lot of people, and especially even people who are not typically involved in the market, not typically watching it, were watching today. And whether you're in the market or not, we've had this conversation before, but what happens matters. It impacts you, not just in terms of getting wealthy, not just in terms of your retirement, your 401k, your pension, which are all impacted heavily by the stock market, but also the taxes that we pay and discuss politically. How much money each year the state has to put into teacher pension funds. That's a constant conversation here in Connecticut. On a state level, for example, a town level, how much money we have to put into funds for retirement for police or fire, what have you, because the market has not kept up with demand going forward. The state, for example, made a huge mistake where they greatly overestimated the returns from the market for years. So they were not putting enough money into their funds for teacher pensions. They were also overestimating the percentage return they were going to get in the market consistently. One of the changes that was made in the last few years was lowering that percentage. And we look at that huge amount of money that we owe and have to pay into that fund at some point, and we have consistently put that off and put that off and put that off. So what the market does matters. It impacts you whether or not you pay attention to the market or not. And that's why part of every politician should have classes and some experience in finance and understanding what's actually happening. It impacts us whether you buy stock or not. It impacts us. But GameStop today, now if you're not a stock market savvy person, you can do this with me. You can you can do the same search I have. Just do GameStop stock price, and a chart will come up. And I'm looking at a chart for the last 5 days. And you can see that 5 days ago, the stock was 42.59. It got up a little bit to about 119. It's a massive run on January 25th. It seemed pretty well timed. Came back down to 69. By the 27th, it was 145. That day, 351. Stayed there. And then this morning in pre-market, and by the way, the market opens at 9:30, but there is pre-market trading. And it went up to 469. That's what it's showing here. It actually went up to 500 at one point pre-market that I saw it. Then, and I tried to short it. I'll explain in a second what shorting is. I tried to short it, which is basically betting that it goes down, but there were no stocks to borrow, and I'll explain what that means. But then it dropped all the way down to 132. From 500 to 132, bounced back up a little bit, and it closed. What is the number here for the close? At 193. That will be much lower in a week. GameStop is a terrible stock. There is no, it is a video game store where people are now downloading video games instead of buying them physically. And they're in malls and strip malls, which are suffering, even before COVID, were suffering. So it's just a terrible stock to own. There is nothing redeeming about the stock. There's no way it should be anywhere near these types of numbers. So I tried to short it when I saw it hit around 500 this morning. I was not allowed to. To explain why you're not allowed to is there are two ways to, in general, there's all kinds of other things to do with stocks, but and you could do options and put options and all that kind of stuff. But you could buy a stock at $10 and hope it goes up, and you make the difference, right? That's a normal way to buy a stock. So you like a company, you think the company's going to do well. The second way is to short a stock, and what you're doing when you short a stock is you're not buying it, you're borrowing it from someone that has it. So suppose you buy a stock for $10 and you're hoping it goes to 12, right? Because if it goes to 12, then you have a stock and you made $2. That same stock, I would borrow it from you without you knowing. It's done through a computer or a broker, what have you. And I'm betting it goes down. So I borrow from you at 10, it goes to 8. You say, man, I got to get out of this. You want to sell the stock. So I give you the stock back, but I only have to give you $8. So I've made $2. I've never actually owned the stock. Shorting the stock is borrowing. So this morning at $500, I was hoping to short this. I wanted to borrow it from somebody, and I kept getting rejected saying there's no stock to borrow. What does that tell me? It tells me that a lot of hedge funds were in this shorting this thing. A lot of people were hoping it goes down. And so there were the people who got crushed. There were people who had this thing short at 15, 20, 25, 30, $45, got destroyed today. And the big problem with buying short is if you buy it to go long, buy a $10 stock, you can lose all your money. It goes to zero. You short a $10 stock, you lose all your money at $20. What if it goes to 50 or 70 or 100? If you're a broker, you have to come up with that money. And if you can't come up with that money, you try to get rid of that stock quickly. It's called a short squeeze. That's what happened. The people who were short were desperate to get rid of the stock, so they would sell it at any price. And they were selling it at sometimes $100, $150. They bought it at 20. They lost 5 times their money, or 10 times their money, or 15 times their money. Now we all feel, well, if it's a hedge fund, who gives a damn? But not everybody in that was a hedge fund. Not everybody in that was a multimillionaire. And what if the hedge fund, retirement fund that was short that stock, probably rightfully so, GameStop is not a long-term success waiting to happen, from what I can see. What if that was the mutual fund or the fund that was in your teacher pension, or the fireman's pension, or the pension for the state? And what if while this was happening, some kids jumped in and decided, let's play this game, and suddenly they get a bill for 4 or 5 times the money they put in because they didn't know what they were doing. And part of the danger here is, one, the SEC, which governs, is supposed to be the watchdog for the stock market and for Wall Street, is this tiny little nothing organization. They're too small to do anything or have any significant effectiveness. Yes, they go after some people. In general, they miss it. They found Bernie Madoff, but obviously way too late. There's 99% of what happens on the market in Wall Street happens without the SEC either caring or knowing much about it. Secondly is this, and especially during COVID, you had a lot of what we call retail investors. These are the people who walk the storefronts, the people who are not, I'm a retail investor. I'm not a hedge fund. I'm not a mutual fund. I'm not no inside information kind of guy. I'm just watching the charts. We are the regular investors. And a lot of people have said, well, I can't go to work because of COVID. Let me put $10,000 in the market or $20,000 in the market. And that may be a significant amount of money that they have. And they're playing on sites called Robinhood, which is, kind of where you go if you don't know what you're doing trading and you buy stock on it. Most real traders would not go on Robinhood because the execution time makes no sense. But in any event, so a lot of the people who were hurt were hedge funds, no question. But there will be a lot of victims here who were not hedge funds. And there were a lot of victims. Now this gets crazy, and people start buying it at 200 and say this is going to go to $1,000, and it's going to buy 300 and 400, and they buy it at $500. If you bought this stock at $500, it dropped as fast as it could. You got screwed trying to sell it. You didn't have buyers. Who's buying the stock at 450 or 400 or 350 or 300 when it's dropping an amazing amount over time? So you want to sell it, but you can't find any buyers for that stock. So these are all the different things in play with this stock today, what we saw today. So now what happens? All the regulators come out and all the elected officials. Oh, this is awful. And this is terrible. And it's, this is Wall Street getting away. And Elizabeth Warren, and that's kind of been her message since day one, used it in her interview to talk about child care and a 0.5% tax on the wealthy. It was just nonsense. There are some regulations that have to be in place. The other huge question here is, and yesterday I talked about this, and I posted a little bit today on social media about this, was this kind of has a Robin Hood, or not a David versus Goliath feel, where the hedge funds were screwed by some, people posting on Reddit. That's not exactly true. Because in order to move the market this much, whoever was posting on Reddit and whoever was following the people posting on Reddit had to have some serious money. These aren't investors the size of me and you. These aren't people with $50,000 in the market. These are people with hundreds of thousands, millions of dollars in the market who are saying either they're making the post on Reddit, part of the conversation, or they were hedge fund guys who knew enough to be watching those posts on Reddit. So there's no guarantee that the people who caused this are little nothing people. In fact, we know in order to move the market this much, they had to have a significant amount of money behind it. Remember something, well, I shouldn't say remember because not everybody realizes this. The market is not about what you think a company is going to do. It's not about whether or not this company has a new widget that's going to change the world. It's not about whether a pharmaceutical company has the cure for cancer or the cure for COVID or a best. We can ask, we can analyze, and what I do all the time, I start almost every day looking at companies, looking at balance sheets, looking at forecasts by those companies, profit reports. The market is really about a very different question. How will other people react to this information? So if Joe's pharmaceutical company in Brantford has the cure for cancer, that's great. You know it, that's phenomenal. But if no one else ever knows that, or no one else ever sees that stock's not going up. It's about what the mob is going to do. And so when I'm analyzing a stock, when you're analyzing a stock, when your mutual fund is analyzing a stock, when the experts are analyzing, they say, how will people react to this? For example, Tesla's a great example of that. Usually a stock is, okay, a company is worth, we think on paper, $10 million. We want to price it at 5 to 6 times forward earnings. So we'll make it a $70 million stock. Those are very generic numbers. That doesn't make sense, but for argument's sake. Tesla's like, all right, we got a $10 million stock. We're going to price it at $40 billion. Like, there's nothing that makes sense in Tesla's evaluation. But what's happening there are retail investors have said, I want to be in Tesla. And more people who may or may not understand stock evaluation are saying, I want to be in Tesla for the green aspect, for the energy aspect, for the battery they have, for the car, whatever it is, they want to be in it. And by more people wanting to be in it, more demand for the stock. This supply and demand raises the stock price. Does it mean the company's worth that? No. We asked ourselves, what will the mob do? Solar companies did phenomenal because a lot of these younger investors really into energy, really into green. And so a pharmaceutical company has a really good trial. We have no idea if that drug is good or not, but people jump in because when a pharmaceutical company finds a really good product and it goes to market, they can make a fortune. So it's all about the mob, and we're asking ourselves, what will the mob do? What happened on Reddit was somebody initiated the mob. In those conversations, in those discussions, in those posts, somebody was convincing enough to say, let's jump in and let's do this. And they started. And then likely 1 or 2 hedge funds guys or 10 hedge funds guys said, wait a minute, we have this thing started. Let's jump in. And the hedge fund guys didn't bring in $50,000 or $100,000 or a couple $100,000. They bought in 50 million and started buying huge amounts. And as they started buying huge amounts, other hedge funds started saying, and other traders started saying, wait a minute, this thing is jumping up like crazy. Let's get in, get in, get in. Everybody's in this thing, and it drives it up to $500. And then the smart guys say, let's get the hell out before everybody else realizes we shouldn't be in this. So the smart guys sold at 450 on the way up. And so at the end of the day, is it a game? Yes, but it's almost like poker. You know, if you go to the casino and put money in a slot machine, it's just a game of luck. That's all it is. The stock market is not just a game of luck. There are examples of that. But now leave those slot machines and go to a poker table. At a poker table, you'll find people who have no idea what they're doing. They're just happy to be there. They watch it on TV. I want to try it. They bluff every hand because they think that's cool. Most poker players rarely bluff, the good ones. And you'll see the good poker players consistently do well. That's skill. The people who consistently do well in the stock market, that's a skill. They're cool, they're calm, collected, they're playing a long game. But then you have this crazy stuff. And the crazy stuff is what our elected officials are going to respond to because it's going to get them on TV. Elizabeth Warren got on TV and gave the same message she'd been giving for the last 10 years on a wealth tax and child care for all and whatever it was. Do we need more regulation? It's not more regulation. We need an SEC the size of a body that can actually regulate the stock market. Because as it stands right now, SEC is nothing. Like a giant cruise ship and a little dinghy next to it saying, we're going to regulate you. It's not going to happen. Some of the comments, good morning. Hi to Mary Elizabeth. Kathy, I tried to buy GameStop, but Robinhood wouldn't let me. Robinhood stopped it. So markets, and this happens, this isn't just Robinhood, this happens all the time. When a stock jumps up far too much or too low, the stock market says something's going on here, and they freeze the market. So here's what the accusation is going to be in GameStop. Usually when the market is jumping that much or that high, it's usually retail investors going against each other. In this case, it was retail investors against the hedge funds, and the accusation is going to be that the markets, New York Stock Exchange, those whatever, stop trading on those stocks for a few minutes to allow those big money guys, those big hedge funds, some plan, some way to do it. So that accusation is you're going to hear a bunch of. Robinhood stopped allowing you to buy GameStop. They allowed you to sell it, and if you sold it, you took a massive loss probably anyway. They wouldn't let you buy it. So did Interactive Brokers. I think TD Ameritrade allowed you to buy it, but there was such a delay because of demand. But there's going to be all types of accusations and crazy things that happen. But it's really a spectacular story that if we are understanding that the market is about moving the mob, we've watched social media impact elections, groups of people, and crowdfunding, raising money for nonprofits. And now we're watching social media be used to move a stock that had no right moving. GameStop is not a long-term success company. There's no way for GameStop, unless they get bought out or something, there's no value there. It's like buying Macy's. Can Macy's survive? Maybe. But as a fraction of what it is now, the world has changed. We don't go to department stores anymore. What's actually working? Specialty stores and online. Ulta's working, specialty store. There's still an experience to go in there. Costco works. It's a specialty store. There's an experience going there. Going to Macy's, nobody does that. My grandmother did that. Sears, nobody does that anymore. I remember going to Sears as a kid and buying my first suit or whatever it was. Like every time my grandmother was over and going shopping, we went to Sears. No one does that anymore. So it's drastically changed. GameStop is that same thing. The people now, I think, believe down. I don't play those games. I don't know video games at all. I play Pac-Man. That's the best I'll do. But in general, you download them. On the much too risky unless one has money to throw away. We hope that the people who are doing that have money to throw away. I can tell you it will be many people who did not have money to throw away. You know, yesterday, this idea of get rich quick permeated every news story. And there were going to be people who jump on that and say, hey, I saved 5,000, let's put it in there, and it was gone like that. Steve, sounds like a BS way to make money. It may be. It's not the right way to invest. It's not, looking long term. It's not even day trading. It's just totally speculative craziness. But if you can manipulate the mob, if you can get the mob of people, a large amount of people, to think a certain way, if you had bet on Donald Trump early in that Republican primary, you did great. What did Donald Trump do? He motivated the mob. And that mob grew, and people joined it, and then people were saying, I'm going to bet on that mob. The same thing happened here. People started commenting. They had enough of a following that they can say, all right, let's go for this. People started jumping in. Larger investors started watching and said, okay, we're going to jump in too with the big money. And then you saw massive jumps, just massive jumps. Kathy, I heard the guy on Reddit is donating it all. That'd be great. Okay. The other part is, who is the guy on Reddit? Who are these people who are commenting largely anonymously with fake names? How do we know they're not the hedge fund guy? How do we know it's not an enemy of that company that was short saying, hey, let's manipulate the market? We don't know. Justin, I think it will fall again too much too fast. In the gaming world, GameStop is a useless media in the current. Absolutely, GameStop, from a merit as a company, makes no sense. It has no merit as a company. It just, the people who were short GameStop, in my opinion, were right. I would have shorted it too. I didn't. I wasn't in it, but I would have shorted it too. I'm not in things long term in general. If I am, it's a mutual fund. But to give you an example of what I did today, and I took a loss today on the trade that I made, and I made a calculated decision. So one of the other companies that this was happening to was American Airlines. So is Biden the media motivating the mob? No, this had nothing to do with Biden. Nothing to do with Biden. This happens. What happened today was the mob got going to go against the shorts. The people who were betting the stock to go down, the mob said, let's push it up and screw those guys, basically. So a bunch of kids, whatever, on Reddit decided to do that. And then larger people with larger amounts of money noticed it. That's what happened. It has nothing to do with Biden, nothing to do with Trump. And the media wasn't the media, it was the Reddit platform. Reddit is basically like Craigslist with chat rooms. What I did today was the same thing was happening to American Airlines. American Airlines went to 30. Now, American Airlines is different than GameStop in that American Airlines is a valid company. And so conventional wisdom is that will bounce back as COVID slows down, as the vaccine spreads. So it's one of those growth companies like cruise ships where, if you buy it now, eventually it'll come back. So American Airlines went to 30. It got down to about 23, 22. And I said, I'm going to buy at 22. And my thought process was either this jumps up in the same kind of frenzy and it jumps up and goes to 60. That's great. Or I lose money and it goes down and the frenzy never takes hold, but it's still a company that I think should be higher and I'll hold it long term. And that's what happened. So I bought it at 22. I bought some going down. My average on this, and there's not a ton of shares here, but my average on it is 20.68, and now it's at 18.10. So I'm down $2.58 on this stock. So I lost money, but do I think American Airlines is going to be an $18 stock in 6 months? No, I think American Airlines is going to be a $30 stock, so it can hold it. That's calculating a risk, looking at your different options. The people buying GameStop were not calculating a risk. They were buying it, hoping it goes up, and it kept going up because big money kept throwing money into it. Then big money jumped ship. And all those retail holders, all those people that thought they were going to get rich quick or bought it for $50 or $500 were stuck. And they lost a fortune. So on American Airlines, Michael, American Airlines will bounce back. It's a real company. The difference, you have options when you're dealing with a company that's a valid company. They actually do something. They have a future. American Airlines will come back. Cruise ships will come back. Someone I know bought Norwegian at $9. If you bought a bunch of those Norwegian, American Airlines, whatever dropped, those ones that are companies that were just crushed in the entertainment business, they'll come back. On March 18th of last year, the worst day of the market, you made a fortune, an absolute fortune. But what we saw today is nothing about investing, nothing about smart retirement planning. There's nothing about being intelligent when you look at the market. It wasn't about looking at the pros and cons of a company or a business. It was all about the mob and how to manipulate the mob. And we've seen it in politics and we've seen it in the stock market now. The question is, how far does it go? So Reddit then turned that page into a access invite only page. Discord, which is a fairly popular discussion site where people go, a lot of day traders go there. They shut down that page, saying basically many of the comments were either racist or inappropriate. And on the news today, they were saying some of the things posted on that page you couldn't repeat. So it's a lot of kids saying stupid, really ridiculous things. So there are some social media put back. You had some platforms not allow trading on those particular stocks. That'll be another part of this argument. Obviously, Biden has nothing to do with GameStop. Looking at his recent political moves. All right, help me out there. I'm not sure what we're referring to there, but I'd like to know. Kathy, lottery or casino? I don't look at the stock market as a casino. I guess you can if you looked at the entire casino. When you say it's a casino, we're acting like it's a game of chance. The stock market is not a game of chance. The people who know what they're doing will somehow pull ahead. Same as a poker game. You go to a poker game around the table on a Saturday night. Go to Mohegan Sun on a Saturday after a concert. So whatever concert there was at 10:30, the concert gets out, and everybody who's there for the concert decides to go and play poker because they watched it on TV and they never played before. If you are a decent poker player, you will make a fortune on a Saturday night at 10 o'clock because every idiot comes in and they will bluff and play more than they should. It's just nuts. I'll talk about AMC in a second. It's crazy. Why? Because the real people who know what they're doing are going to make money. The people who don't are going to come in and they're going to get killed. There'll be a couple that get lucky. There's that one kid who gets in and never played before and he hits a hand and he 3 times his money. But enough people get lucky to convince the other idiots that they should keep playing. That's what happened in this market. There are wealthy people who made a fortune in the last 2 days on GameStop. Some retail guys made some money. Some retail guy turned 50,000 into $1 million. Congratulations. The vast majority who didn't know what they were doing are going to lose money. There are many people, guarantee you, who had this stock at 450, maybe 500, 370, 380, that ballpark, that tried to sell and couldn't sell, and it kept dropping 10 bucks a piece. Lost a fortune. The professionals will always do it. Having more information will always help you. But understanding, if you're going to day trade, you're going to understand the market, the mob is everything. What will the mob do? That will move the market. If Biden announces X, how will the mob respond? If the Fed announces X in inflation or a future rate, how will the mob respond? When you can determine how the mob will respond, and you're correct on that more than 50% of the time, you will make money in the stock market. Inside info I heard about AMC is the next to go up. So I think I talked a little bit about AMC yesterday. AMC is a movie theater company, and it took a huge hit when, well, COVID, obviously. And then when Warner Brothers announced it was going to put their movies on HBO, it also took a massive hit. But so did Cinemark. And what I did about a month ago when that happened is I looked at AMC's numbers and I looked at Cinemark's numbers, and I correctly determined that Cinemark was the word place to be. It was $13 and change. I bought Cinemark. I posted on my personal page, and I think I commented here, one of the openings to one of the podcasts, I was buying Cinemark. It's in about 20 bucks now. It was a really, really good buy. AMC was not a good buy. They didn't have enough money. So they have a huge short interest. They probably saw the same thing I did. I didn't short AMC, but many investors shorted it, probably rightfully so. AMC then went out and borrowed more money to stay solvent. The stock went even lower, helping the shorts. And then you had the same group of people today say, wait a minute, let's go after the shorts on AMC. They all poured into AMC, and AMC skyrocketed. It was over 20 bucks. I think it was under 10 now. But that same thing can happen. They're going after shorts. What you saw happen today, which was interesting, is many people said, listen, I got 10 grand. I'm finding the most highly shorted stocks and putting $2,000 in each one just to make sure that if this happens again, I'm on, if this goes crazy, I make some money. You have crazy things happening. This is absurd. But despite the absurdity, the market still keeps some predictable patterns. I'm waiting a big drop. We had a 600-point drop yesterday. We're up 300 today. I'm still waiting for a significant drop. I think it has to happen. Things are just too high. But we talk about that because so many of the questions and comments that came in last night after our podcast and today during the day were about this and explaining what just happened in the market. And this is not, we talk a lot about politics on this podcast, but finance is a big part of that. Economics is a huge part of that. And understanding what's happening. Now we're going to get to regulation, and we're going to have congressional hearings, and we're going to have people who may or may not have a clue what they're talking about asking questions of people who do. And we're going to see going forward what kind of changes can be here. And this idea of social media having the ability to block a page, determine who gets on it, determine what can be posted, whether it's a president about a stock or about anything, or about a group about a stock. I post sometimes on my Facebook page what I'm buying. What if I had 2 million followers and 10% of my 2 million followers said, all right, whatever Steve buys, I'm buying? It would move the market. That happens now. There are groups of people that are day traders, and the leader says, we're buying X, and it can move the market. It becomes a self-fulfilling prophecy of enough people buying that stock. Day traders specifically look for what's called low float stocks, but there's not a ton of shares of the stock. So if you buy 20,000 shares of it, that could be a huge percentage of the float, the overall stocks available, and it can drastically increase the price. So you can become part of a self-fulfilling prophecy. Is it legal? There's nothing illegal about me posting that I'm buying a stock. If Donald Trump, with all his followers, got on whatever social media he could and said, right now I'm buying stock ABC, and his followers all said, okay, we're following him, that stock would skyrocket. So what's to prevent that from happening? Is there a law against that? Not really. What is the role of social media? And that role of social media we're talking about in political context, but it applies to economics, it applies to stocks, it applies to so many other areas. And then when does this become the norm that it starts impacting your pension and your state funding and your retirement account? When does that happen? Because that may be the next step. Okay, that'll wrap up for today. And this will wrap up for the week, unless there's some major news of some sort. But it really was a wild week. This was incredible to watch as someone who covers news and the market and basic economics. It was amazing to watch this story. If you see more articles on it, watch it. I'm sure there'll be documentaries on it pretty soon. It impacts you. This isn't something that's just people at Wall Street do. This is people that live in the apartment next to you, that live in the house next to you, that are getting coffee next to you on their computer. They're doing this. And it will eventually, maybe not with GameStop, but this process will eventually start impacting pensions and retirements and 401k. Guys, have a great week. Enjoy this one, and I will see you on Monday at 4 o'clock. Have a great night.